Will Aussie housing crash? Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee, although I'm out at the moment, and let's have a look at this article I found from Ford Advisor, which is asking the question, is the Australian property market going to crash? Now, I have, several times discussed my several points as to why I do not believe the housing market will crash. You know what? I will bring them up now so we can have a look at them. This is, 9 points now? And I'm thinking of renaming it as the pillars of the housing market here in Australia, guys. So if we jump over here, the first is, while we do have bad loans and non-performing loans, they're not at exceptionally high levels. They're still quite low. Even in New Zealand, where they're worrying about arrears rates, it's still very low. You've got immigration returning, everyone. The floodgates are coming back. Everyone wants to come to Australia. And countries around the world moving forward are going to compete for immigrants. Just wait and see, everyone. Just wait and see. You've got the construction apocalypse. Our ability to address the demand for this new housing is eroding. It's eroding. Insolvencies are going down. You've got government support and interventions to stimulate the economy, which often use housing. We saw it with Home Builder. Now you've got shared equity. You've got, government loan guarantees to get people into housing. That's not going anywhere. That's part of our culture. It doesn't matter which side is in power, guys. Okay, don't kid yourself. You got the zombie companies kept alive and the trading while insolvent. That's the one that really, really worried me because we're seeing the consequences of that. You've got, the not in my backyard crowd as well, everyone. You've got market competition. 50% of people live in these three areas. That's not going to change. Okay? There's a whole lot of Australia in the middle that no one wants to live there. They only live there because, they're working in a mine in the middle of nowhere or a cattle station. I don't think people are loving it in Alice Springs right now, are they? You've got NCC changes, driving up building costs. We now have livable housing requirements, which is going to make all houses more complicated to build. $30,000 per cost. That means established houses. It's another. It's going to put the cost up of every new build. So every established house is going to be more expensive. You've got APRA interventions. They'll step in so credit isn't choked off. It's like an interest rate decrease right there. You've got family support. Majority of viewers of this channel, and I see the stats, a lot of you are grumpy old bastards like me. 66% will step in and support family. Then you've got the FOMO impact, the mania of when people bought in. We had, 600,000 dwelling sales in 2021. And let's say 10,000 of those are the 2% government loan guarantees, and they all fall over. In the overall scale of the market, that's not that many. Okay, so these are all things that are, supporting the housing market in one way or another, guys. So let's have a look and see what this article has to say if housing is going to crash. Because I know there are people there that are waiting for it to crash. And I don't blame them. It's bullshit, okay? The cost of housing in Australia is utterly bullshit. It doesn't mean, though, that it can't keep on going for our lifetime. People are saying it has to crash. Sure, 50 years' time. Why wouldn't it? We don't know how long they can kick the can down the road. We've got lots of modern tech. So, anyone selling a property or trying to buy one in recent years would be well aware of the rapid increase in Australian property prices during the 2020 and 21. However, over much of the 2022, property prices began to fall dramatically in the case of some markets. Sure, but we're not at 2019 levels, are we? As the RBA lifted the cash rate and mortgages became more expensive, as we move forward further into 23, there are signs of recovery in the property market, with CoreLogic's Home Value Index recording a slight rise of 0.6% across all capital cities in March, the first such rise in 11 months. Nevertheless, prices remain above pre-pandemic levels. That's what I would consider the real marker if we have a crash. Losing this mania-driven insanity, the lockdowns and the pandemic was a once-in-a-lifetime event. Hopefully, touch wood. Hopefully we'll learn lessons from that, although I suspect we won't. In its latest report, the IMF ranked Australia as the second highest country behind Canada for housing market risk out of 27 countries, owing in a large part to our level of outstanding housing debt to income. The big question on many minds is whether the property market is going to crash, and we spoke to 2 experts to get their take. So COVID-led boom. It's important to understand that while Australian properties are more affordable now than during the pandemic, they are still hugely expensive. Australia's housing market saw a recent peak in April 2022. At that point, the market had risen by about 30%, said Eliza Owen, head of research at CoreLogic. We had a stronger upswing in regional Australia, where values increased about 40% between late 2020 and early 2022. While in the combined capital cities, the upswing was 25%. Yeah, we're talking huge increases. This is almost altcoin rates of return. Owen says the boom was largely fueled by the emergency low interest rates during the COVID-19 pandemic that slashed the cost of borrowing, and the strong recovery that followed with high demand, low unemployment, and high levels of accumulated savings. Marie Kilroy, senior economist at BIS Oxford Economics, said some preference shifts during the pandemic also buoyed the housing market, such as increased demand for holiday houses, tree changes, moving to regional areas, the return of expats, and people wanting more space or their own space following lockdowns. So will the property market crash? According to Domain figures, the value of Australia's housing market fell by -5% across capital cities in 22. Sydney dropped 10.9%, Melbourne was down 5.9%, while Canberra and Brisbane values fell 6% and -1.1% respectively last year. Yeah, but Brisbane has just gone nuts. It's just gone nuts. Most of the damage was done by the end of spring selling season, according to CoreLogic figures. Australian combined capital city property prices fell 6.5% between their peak in early 22 and November. But Owen doesn't define this as a crash. In my mind, a housing market crash is defined by the loss in value and a loss in mortgage serviceability. When you get to a situation where people can no longer service their mortgages, have to sell, and when they try to sell, they can't get enough money to cover the loan, she says. That's not something that we're seeing in this market. Kilroy says that while there is no doubt the property market has been in a downturn over the later half of 22, a crash is unlikely due to strong economic fundamentals. The first of these is demand, with high rents and the return of overseas migration resulting in more potential buyers. Well, the rents means the yield you're getting on your investments getting even better. She says that on the supply side, continued low unemployment is limiting the number of properties for sale, with distressed sales not yet evident in the housing market. So the impact of rate rises. Kilroy says, rising interest rates were the key factor underpinning the property market downturn last year. It is a credit availability issue that is driving this downturn, unlike a rise in unemployment or an oversupply in the market. Since it began raising interest rates in May 22, the RBA has increased rates for 10 consecutive meetings, lifting the cash rate to 3.6% before deciding to hold the rate steady in its April meeting. Owen adds, this is the most rapid increase in the cash rate that Australia has seen since the early 90s in response to very high levels of inflation. Interest rates are the main thing that has led to this correction in housing values, so the key element that drove the housing market upswing has essentially been reversed. So what's in store for the property market? As Owens pointed out, prices will continue to fall as long as interest rates are rising. However, she also noted that the magnitude of the declines started to moderate late last year, with a national fall of 1.6% in August slowing to a fall of 1.2% in October. Over the past couple of months of late last year, we've seen a slowdown in the pace of decline, and there's a bit more of an orderly trend creeping in. Then, of course, was the slight rise in CoreLogic's dwelling values in March of 0.6, indicating that we may have reached the bottom of the falls. We'll have to see. I mean, I'm not really arguing with anything they've put forward. It all seems quite reasonable, doesn't it? But if we've seen the removal of the, well, let's say stimulus impact due to low rates, and we're still quite high, it's not crashing. Owen said the best guide for housing market outlook is the cost of debt, with property prices likely to increase once interest rates start to fall, something Kilroy is expecting in either the last quarter of 23 or the first quarter of 24. However, Kilroy adds that since the boom was fueled by the unique circumstances of a global pandemic, property prices aren't expected to bounce back to their previous highs in the short term, as interest rates are unlikely to fall as far. She's forecasting any fall in interest rates to bottom out at around 2.6%. At only 2.6%. It shows you how insane the 0.1% cash rate was, doesn't it? How far will prices fall? We're expecting a nationwide dwelling peak-to-trough price fall of 11.5%. And we're expecting that trough to be met in the second half of 23, Kilroy said, adding that BIS Oxford economics forecasts are at the low end of the scale compared to some commentators. However, the same falls will not be experienced universally. We're forecasting a 13% fall for houses, 8% for units. We're forecasting Sydney to have the greatest fall in house prices of around 18%, while Perth houses at the other end of the other end will scale at modest 4%. While CoreLogic doesn't make forecasts, Owen said the big four banks are tipping combined capital city prices to fall a median 16%. Based on the forecast, this could be one of the largest housing market downturns we've observed. Yeah, but we've just come off a largest peak in what? In how long? 30%, guys. 40% in the regions. So we're not at pre-COVID levels, are we? This is coming off the back of one of the biggest upswings we've observed in the Australian housing market as well. So is Australian housing at risk? Most recently, the IMF released a report, a rocky recovery that ranked Australia second only to Canada in relation to housing risk. It did so after looking at 5 key metrics. 1. Sorry, I need a drink. Okay, 1. Outstanding housing debt to household income in June last year. Australian housing debt is roughly 145.4% of the country's total disposable household income. The share of housing debt on variable interest was around 70% of loans. The share of homeowners with a mortgage was 37%. Wow, shows you a lot who don't have a mortgage. It's crazy. Cumulative cash rate changes from March to September has hiked, yes, and real house price growth between March 2020 to 22 was about 25%. Commenting on the IMF report, Owen said that while the ranking is sobering, there is a reason for optimism. Many households have accrued strong savings buffers through the low interest rate period, and labour markets remain extremely tight. Housing market conditions are turning a corner amid low stock levels, rising demand from overseas migration, consumer sentiment shifting higher as we approach what may be the end of the rate tightening cycle. As the IMG said in its report, or IMF, in most cases, it's unlikely that an ongoing fall in house prices will lead to a financial crisis, but a sharp drop in house prices could adversely affect the economic outlook. So there we go. Let's have a talk about this one. So, not really any different to the arguments that I've been making. We're not even going to hit pre-COVID levels, it looks, at least from these assumptions. What do you reckon, guys? Let me know your thoughts in the comments below. Were you a housing mega bear that is starting to face reality, or do you still think it's constantly going to collapse? Because there's still people out there that are pinning their hopes on it. I mean, here's the thing. It's like trying to time the market with an investment. That's bloody hard to do. As always, thanks for watching. Check out Heise BIM and Heise Does. And if you're a fan and enjoy the content I discuss here, you can support us on YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care. Have a great day. I'll see you next time.